My money. Give me your love.
Refinement analysis is basically to pick liquidation levels or to pick the two levels of reversals or to see whether they're going to align with a higher time frame, okay, to increase my chances of winning, either to be the positive or to be the negative.
These are like marking your point of
share. Yeah. Now, refinement analysis mainly rely on positive or to be the negative. Now, the other one was top analysis. After doing top analysis, I'm going to go to the next phase, which we call the down top. Down top analysis. Yes, because we have actually no. Let's first not do this. Let's first go to what we call refinement analysis. Refinement. You're going to do this one, refinement analysis. Now this is the second one. First one was top down. Then I will have to go to the refinement. Okay. Now what is refinement analysis? Refinement analysis is basically to pick liquidation levels or to pick the two levels of reversals or to see whether time frames are going to align with a higher time frame, okay, to increase my chances of winning, either to be the positive or to be the negative.
These are like marking your point of interest.
Yes, marking your points of interest. Because it's another squid game for so many traders. Okay. They find it hard to know which levels are going to hold.
Very true. You find that you mark out a level and then it doesn't hold.
It doesn't hold. True.
So, okay.
So you find out that this analysis is going to save you a lot of drama. Now, it can help traders who do supply and demand. It can help all traders who do ICT concepts. Whatever trader, this is going to help you, what I'm going to share. Yeah. Now, refinement analysis mainly relies on these busy time frames we discussed of the daily, 4 hour, and 1 hour, because these are what you call these levels will give us what you call liquidity levels. Or these are what you call liquidity time frames, or what you call sometimes the busy time frames, or what you call intraday time frames. Okay. And now here we also have what we call the dominance, which we're going to. Okay. So basically, we're going to be trading daily H1, H1. Yeah, this is why traders lose. Okay. So many. They either give you less time to think, or they give you,
time to activate,
or they give you a lot of hassle.
Yeah.
But the good thing why I require these time frames, they cannot give enough time to think if you know your strategy well. And the most dominant is daily H4 and H1. Now, let's, for example, under refinement, after understanding the weekly direction, this is where traders do this mistake from. Remember, we have the daily, 4 hour, and the 1 hour. Okay, I have the daily, 4 hour, and the 1 hour. Now, for this time, for example, we're going to look at what we call dominance, which I'm going to show you. Dominance is basically looking for which time frame can I use to execute in, and how. The 1 hour chart has so many key levels. Let's assume these are demand zones, or what you call high highs, high lows, what you call order blocks, the same thing. Then you open up H4, there may be like 2, maybe daily there is 1. Who's likely to dominate?
Of course, the daily.
The daily, isn't it? Because daily is the one now controlling
all of this.
So you taking here trade is committing suicide. You may like see profits of you once. You see that? Now this is the concept that many supply and demand traders face this a lot. Yet price is aiming to come up to the daily level.
So they think here it will hold, because here it will hold, whatever fair value gap, order blocks.
I think it will hold. Then price starts to go through them. The same thing when it comes to H4 gives you maybe like a 1 to 3, then later comes and goes higher. Okay. You see that? We shall only trade daily. But now, what if there is no daily? Let's go for some squid game here. What if we have 1 hour and we have an H4, but there is no daily? Who's dominating?
Of course, the 4H.
Key level. So that means I will trade this H4.
What do you mean not?
That means there is no break of structure in the daily.
Oh, okay.
Not a candlestick. There is no break of structure. Now, we shall see. We shall always be the H4. So that means we know H1. So this is basically, you can say H4. We only trade H4 if there is no daily. But now, what if there is no daily Now,
All this.
So you taking here trade is committing suicide. You may like see profits of V1s.
Yeah, viewers.
You see that? Now, this is the
I like
concept
that.
of so many supply and demand traders face this a lot. Yet price is aiming to come back to the daily level.
So they think here it will hold the close, here it will hold whatever fair value gap order blocks.
Definitely. I think it will hold. Then price starts to go through them. The same thing when it comes to H4 gives you something, maybe like a 1 to 3, then later comes and goes higher.
Okay.
You see that? But so we shall only trade daily. But now, what if there is no daily? Let's go for some squid game here. What if we have 1 hour and we have an H4, but there is no daily? Who's dominating?
Of course, the 4H.
The H4
Yes.
key level. So that means I will trade this H4.
What do you mean not daily?
That means there is no break of structure in the daily.
Oh, okay.
Not a candlestick.
Yeah.
There is no break
Break
of
of structure.
structure. Now, we shall see. We shall always pick the
The
H4.
4H.
H4. So that means we begin on H1. So this is basically, you can say H4. We only trade H4 if there is no daily levels.
Okay.
We only trade H1 if there is no H4.
So
Like picking a point of interest,
yes.
POI, not entry yet. This is picking the
Just
right
the
POI.
point of like where you have to focus that if price comes to this level, I'll see how it will move.
It will
react.
good.
Okay.
So this is basically how this is how I pick my points of interest. Know who's really dominating
Okay.
in these 3 time frames. Okay. So I only trade H1 if there is the break of structure. But if there is data, I have to be so patient in this asset. Now, what traders don't know that so many assets have different dominance. You find that I would use this 1 hour. Or maybe find out maybe in New Zealand USD it's 4 hours. Or maybe find out gold it is daily time frame. And you have to be patient for price to come back there.
Okay.
Because you can't submit only this one is much that you have to be a prostitute to time frames. Never love one.
Time frames and the assets.
The asset and the asset is the same thing. Never have one.
Never marry a single time frame or an asset.
Or an asset. So have so many.
Okay.
At least try to trade 4 assets.
Because someone can say, which time frame should I focus on? What time frame does the strategy work on? It means you have to be diverse, like dynamic.
True.
Okay.
So the reason why we follow the dominance, if you see daily break of structure, that means we're going to have more participants on that daily. Because the higher the time frame, the stronger the liquidity. Now, if the time frame doesn't have a break of structure, which is above, that means this time frame is not strong. Daily is not strong if you don't have a break of structure. That means H4 is strong. It has more participants who are the market makers. That's why you always notice more volume in those levels. Whether it's New York, that's why for me I can do analysis in the morning. I notice that maybe price has bought in the day. It does not yet come back. Then in the evening hours, maybe it came back. And the whole maybe the evening hours, maybe after decided to drop. Then in the evening I execute either swing trades. So if sometimes if I grab trades on the day and H4, they become swing.
Okay.
You find them holding them like for 3 days, 4 days. Then if you are trading 1 hour, it becomes instead a scalp.
Yeah.
Now this is for refinement analysis. So the interest, picking the right point of interest.
Okay, so you're not specifically a day trader or a scalper. Any setup you get, you can execute. Okay, depends on the refinement analysis you get.
Because for me, I always take like at least 2 to 3 trades a week.
Okay, and they last.
Some of them can last 3 days, others can last 5, others can last 1 day.
Okay, and some can last for hours.
Actually, even there are some which I noticed that this one has a potential becoming a swing or even a position trade, depending on the level.
Even if it was a day trade, you can hold it for.
I can hold it if I see that potential.
Okay.
So how do you correlate this with a weekly time frame? Now remember, let's assume weekly has created a break of structure of this kind. Let's assume it has created a breakout fence. So how do I correlate it with a daily time frame? Now, if it has broken breakout structure, now for me to easily enjoy this continuation when it is continuing, This we call it the markup phase. So I can go and look which time frame has just dominated. Is there a daily breakout structure outside this weekly range, within that weekly? Then I'll use that day for continuation. This happened on Euro Audi. That was last month when weekly had broken down. We had so many days that we're using. We pick the current daily breakout structure. Yes. We didn't know the old ones. Okay. So if his daily breaks the structure and didn't come back on that day, created another one, we follow this one.
So it means you, okay, if you have a daily breakout, then you use this. So you wait for a retest.
Yes, I wait for price to come back above this level.
Okay.
Then I can sell. I'll explain why we have to wait.
Okay, we shall go into the entries.
Okay. So I'll always wait I'll use the daily. If there's no dailies, then I'll use the H4 that are here.
Yeah.
You see that? But then when there is daily and H4, I have to be so patient. But there are some mistake traders, they're not always patient. There is a daily, he wants to take on this H4. Now he takes on this H4, sometimes it can work, sometimes it can fail. And they just come back the daily and they continue.
Yeah.
So basically, you have to be very loyal to your trading principles.
Okay.
Or to your
trading plan.
Your trade plan. You see that? So this is how I trade the breakout phase. I look for which time frame is dominating. Then I can continue with the weekly flow. You see that? Then that's for one. Then what if weekly is doing a pullback phase? How do you know that weekly is doing a pullback phase? When weekly breaks structure, and for example, inside there we have daily high highs, high lows. Now, if daily breaks its own last higher low here, there's a sign that weekly is also doing a pullback phase.
Okay.
You're getting? So if daily breaks its own higher low, if it is there within that weekly leg.
So you have a break of structure here. So it means we are a weekly pullback.
The moment I always see daily is breaking, I always notice either week is breaking or it is reversing, as you're going to see. Because daily is the immediate time frame next to weekly.
To the weekly.
I remember what I told you, big boys execute using the daily time frame. Because for them they trade long term.
Yeah.
You see that? So if daily changes direction, what you call change of character, what you call shifts.
Yeah.
Because shifts are designed by the market makers. So this one I can get to know that week is in a pullback phase. That's when we see weekly candles are broken structure. Then we see one bearish weekly candle dropping. So you need to go and see, has it broken the daily higher low? So sometimes price can do either come back to this daily to continue down, or it may not even allow and go and create another daily breakout structure for sales, executing that. If it's the one dominating. If it's not there, you see that, then that's for one. Then what if weekly is doing a pullback phase? How do you know that weekly is doing a pullback phase? When weekly breaks structure, and for example, inside there we have daily high highs, high lows. Now, if daily breaks